is Jayanthi, working as an assistant professor in PG and Research Department of Commerce CA in Kamadina Arts and Science College, Satyamangalam. Now we are discuss about banker and customer. First one, introduction of banker and customer. A definite relationship exists between the banker and the customer. A banker and customer are like two sides of a coin. The success and survival of banking business rest in harmonious relationship and mutual trust between these and parties. The relationship between the banker and the customer start the moment an account is opened with the bank and ends immediately on the closure of the account. The relationship depends upon the nature of service rendered by the banker. Next one, definition of banker. Bank refers to an institution that deals in money. The institution accepts deposit from the public and advance loan to those who are in need. These days, banks perform various other functions such as credit creation. Bank is an establishment for a custody of money which it pays out of an customer's order. Next one, relationship between banker and customer. There are 5 relationships in banker and customer. First relationship, debtor and creditor. Second one, bailer and bailee. Third one, mortgager and mortgagee. Fourth one, purchaser and seller. Next, advisor and advisee. Now discuss one by one. First one, debtor and creditor. The debtor is the party that owes the money debt, while the creditor is the party that loaned the money. Second one, bailer and bailee. A bailer is the person who's delivered the property. A bailee is the person who receives it. Next, mortgager and mortgagee. The mortgager is the party receiving the loan and the mortgagee is the party offering the loan. Lessor and lessee. While the lessor retains ownership, the lessee possesses temporary usage rights in the return for rent payment. Last one, advisor and advisee. Unequal power relationship between advisor and advisee puts the burden of responsibility on the advisor's shoulders. Next, meaning of commercial bank. A commercial bank is a kind of financial institution which carries all the operations related to deposit and the withdrawal of money for the general public, providing loans for investment, etc. These banks are profit-making institutions and do business only to make a profit. The two primary characteristics of a commercial bank are lending and borrowing. Next, functions of commercial bank. In functions of commercial bank, there are 2 functions in commercial bank. First one, primary function, and another one is secondary function. First, primary function. First heading, accept deposits. The bank takes deposits in the form of saving, current and fixed deposit. The surplus balance collected from the firm and individual are lent to the temporary required of commercial banks. Next, fixed deposit account. Funds are deposited for a fixed period with higher interest rates. Next one, saving deposit account. Encourage small savings and provide interest on deposit. Third one, current deposit account. Meant for business for frequent transactions. Usually no interest is provided. Requiring deposit account. Encourage regular savings by allowing customers to deposit a fixed amount periodically. Next, advancing loans. In advancing loans, another primary functions of the banker is to advance loans. A certain part of the cash received by the bank as deposit kept in the reserve and the remaining is given as loan. Bank advance loans mostly for productive purpose against approved security. The amount of loan is generally less than the value of security. In advance loans, first on discounting of bills, providing funds by purchasing and discounting trade bill before maturity. Next, overdraft. In overdraft facilities allows account holder to withdraw more than their balance. Next, credit to government. In credit to government, advance given against the security of stocks, receivables or other assets. Last one, credit cash. When a customer is provided with credit or loan, they are not provided with liquid cash. First, a bank account is opened for the customer and then the money is transferred to the account. This process allows the bank to credit money. Next method, secondary function. In secondary function, first type, discounting bill of exchange. In discounting bill of exchange provides immediate liquidity to the bill holder. For example, a trade sells goods on credit and receive a bill for exchange from the buyer. Instead of waiting for maturity, the trader approached to bank to discount the bill for immediate funds. Next one, overdraft facility. Usually offered to current account holders, business and individual with good credit standing. For example, a business needs funds for short-term expenses like payroll but does not have sufficient balance. It uses its overdraft facilities to cover the shortfall. Next, purchasing and selling of the securities. Commercial banks assist customer in buying and selling government bonds, shares, debentures and other securities are part of their investment services. Helps customer manage their investment portfolio and participate in financial markets. For example, an investor wants to purchase government bonds but lacks knowledge of the market. The bank facilitates the purchase and provides guidance. Next one, locker facilities. In secondary function, a bank provides secure lockers to customers for storing valuables such as jewelry, important documents and other assets. For example, a customer rents a medium-sized locker to store family's jewelry and legal documents, avoiding the risk of keeping them at home. Next, paying and gather the credit. Banks provide service to facilitate payments on behalf of customers and collect payments credit owed to them. For example, paying credit. A customer sets up automatic payment for their monthly electricity bill. Gathering credit. A company instructs the bank to collect receivable from its clients. Thank you.